Tension between the US and North Korea, Nompu. What sort of impact did it have on the markets? I hear President Trump saying that his military is locked and loaded, ready for North Korea. That, of course, didn't go down well with the markets, did it?
Thanks very much, Devon. Yes, well, Mr. Trump talking tough and really raising temperatures and tensions. But a couple of his officials over the weekend came out, that's his national security advisor, and another official came out and said, trying to quell fears, came out and said that there's no need to be concerned that there'll be a conflict anytime soon. Now, that for me is concerning because it suggests that the idea is still on the table, but people shouldn't get things twisted right now. Markets have calmed down a little bit, and that's hence why we're seeing global markets in positive territory, but the threat still remains. And so, like I mentioned, global markets are in positive territory. The dollar ticked up slightly relative to its peer currencies. And we're seeing, despite that, we're seeing that the rand has accelerated quite nicely. Thank you very much. If we look at what happened in terms of where it closed on Friday in New York, it was around 17.52 against the British pound, and now it's around 17.23. So quite an acceleration there. We're seeing commodities all down generally, and I guess that is in part due to that slight tick up in the US dollar. Let's take a look at the indicators. Well, I'm joined by Bright Khumalo. He's from Vestact. Thanks for joining us, sir, as always.
Oh, yeah, lovely to be here.
Good stuff. Markets were in the doldrums at the end of last week due to those geopolitical tensions that we've just referred to. But today, they're nice and springy and they're up. What's changed?
Nothing has changed, basically. We're still where we were last week. But like you're saying, in South Africa, though, if you look at the local markets, there were some, political tensions, the possibility that Jacob Zuma could leave as president after the vote of no confidence. He won that by 21 votes. So that didn't happen. And on Friday, well, I think it was Wednesday or something, where Trump came out basically saying, well, he's ready, like you were saying, he's locked and loaded he's ready for North Korea. But then again, you ask yourself, what's in it for him? Because there's only 25 million people in North Korea, and how many Americans out there? He wouldn't risk so many people in relativity, you know what I mean? But the good news in all of this is that South Africa is down in the south, and if you look at the map that basically was outlining who's left after this whole nuclear situation that they're planning to do, we'll be fine.
You say we'll be fine.
Yes, along the JSC.
But we are part of a global community. Correct. And even though maybe a grenade or a nuke won't hit us, it does have an impact on global financial markets. And
yes,
if things go in the wrong direction from a South African perspective, we could experience more inflation, etc., etc.
Yes, but I mean, if our stock market is still up and running and we are self-sustaining, we don't export a lot, we don't import a lot, we can actually produce stuff locally, and we do a lot of farming as well. In that situation of recovering from all the bad that has happened, South Africa, I think, will be fine.
It sounds too much like Armageddon talk. Now, let's get on to commodities. I see the gold price has retraced its gains slightly, but presumably it's still got that potential to breach the $1,300 an ounce level, given the fact that those tensions between the US and North Korea have not really faded.
Well, you know what, Nompu, we don't really follow the gold price very closely. But then again, if there happened to be a nuclear war, and you've removed all of your money from the stock market, and you do put it in gold, good for you, but we're all dead anyways. So what? It makes no sense. There's no point to it. You know what I mean? We just apply the same logic as Charlie Manga when it comes to gold. Gold is not productive as an asset, and we actually, as capital allocators, we like to support businesses that we believe are doing good out there. So, you know, your pharmaceutical businesses that are changing the world and saving people, technology that are, you know, changing the way we think about the future and how we do things more efficiently, you know, get more bang for your buck, basically. Those are the type of businesses we want to give our money to, but giving it to gold is counterproductive. It's doing exactly the opposite of what a true investor should do.
Okay, you're a gold bear, I hear you. Now, Japan reported that its quarter two GDP was up by 4%, which is a very nice number. It beat expectations hugely. I think the expectation was 1.7 or something like that. Given your preference to invest in offshore stocks, given that the local economy is not doing so well, what do you think about Japanese stocks?
To answer your question first, I'll probably invest locally more because there's more opportunities locally now that there's lots of instability. So meaning, you know, lots of bargains to be had compared to offshore. If you look at the Nikkei, which is the index, or the top 225 companies there, basically they're at a level, the same level that they were in the year 2000 during the, you know, the tech boom. Or the tech crash, if you want to call it that. There's lots of businesses there, like in many other markets. Some of them are fairly priced, some of them are cheap, some of them are very expensive. And I think, you know, just choosing Japan as a market because you believe there's more opportunity. I mean, you believe it's better than, you know, just like taking money offshore, rather than a good, you know, third out asset allocation process is not good enough for us. So we want to know why, you know, the reason why you want exposure to the yen. Or you could just, you know, invest in dollars, or, you know, it depends on a case-by-case basis.
Yeah, you look at the quality of the stock, not the geography of the place. Understood.
Correct, yes.
And then let's quickly look at Naspers. Naspers suffered a loss on Friday. It was down by over 3%. This due to Tencent, a Chinese company that it has a significant stake in, about 30%, falling by almost 5%. And this is on the back of Chinese regulators looking to see what sort of content Tencent is putting out. Now, this had an impact on Naspers, and Naspers accounts for about 20% of our index here. Yes. It's a bit risky to be invested in a stock like that, isn't it, when things are going down?
Well, it's very risky to invest in any stock when that stock is going down. I'll start with that. Tencent is a very good company, and, you know, the regulator, the Chinese regulator actually has always been, you know, like that. They really want to make sure that none of their stuff about their communism, about their lives, whatever, however they run their lives there, stays there. They don't like companies that take stuff out. But the good news here is that Tencent is basically focused on entertainment. So it's gaming. So I think what they're more worried about is, you know, kids playing games for over 48 hours and killing themselves in the process, or, you know, good content in those games. So it's not a big thing. It's not a big deal. The reason why mostly Tencent was down on Friday is because it was following the trend in the US, which was, you know, the tech stocks on average were down 4 or 5% on Thursday. So I think I'll associate you know, the red to more to technology as a whole than just the regulator, because again, about a month ago they were probing Tencent again because the kid died playing a game.
All right. Okay, well, on that very sad note, we'll leave it there. Thank you very much for your insights.
Thank you.
Well, it's fair enough. Bright says that there was a little bit of a sell-off in terms of tech stocks on the US market and globally, and that's perhaps the reason why Tencent got hit more than the regulator story. Well, we'll have more business news for you in a bit.